Okay, is this question all right? Question 1.
Yes.
Okay, great. So yeah, question 1, there won't be a recording. I forgot to start the video, but the workings are very good. So I think you'll be okay with it. Remember, in a written exam, you have to show everything as much as you possibly can. Even try write in these little things, show the little workings, even put the little sections in if you can, because they might or might not mark that depending on the marker, depending on the solution. But if you're doing it, then you're on the right track. Okay. Right, so that's one question complete. We need to open up the next one. Oh, hold on. That's the wrong one. Oh, I've lost my space now. Here we go. Okay. All right, so let's have a look at another question. I don't think we'll be able to do all 4. I'm going to do this one because it's very similar to what we just completed. It's also looking at taxable income because we saw it earlier, but it's for an SBC. That's the only difference. Okay, so both 1 and 2 are very similar. Next week we can look at the last 2 questions, at least then we've covered it. Okay, then we've looked at one past paper from start to finish with revision. Then the following week we can obviously go through more. I think even next week we could probably cover more questions. It'll go a bit quicker once we've covered more of the revision, just to get back into the content. Okay, so question 2. All right, here we've got Y Limited. It's a grooming company. They commenced business in May. The year end is Feb. Okay, and we've got SBC here. All right, then they've given you all of the receipts and payments. Okay, this looks like a nice question. It actually looks easier than the other one we just looked at. Okay, number A. Calculate the income tax liability. So it's a copy paste. All of this, copy, paste. Okay, delete, yeah, the rest we can keep. This will change. Okay, we need to follow the tax tables. Right, because it's an SBC. Okay, that's the first one. What's the next one? Okay, if it's a micro, then we'll obviously do something different. And assuming the company is a micro and not an SBC. Okay, that's qualifying turnover. So we need to work that out first, then work out the micro. Okay, so A is looking at SBC, B and C is looking at micro. Okay, let's go to the question and let's go through the workings. All right, so we need to put things in. Income. Cash receipts. Credit sales. Okay, this would be your normal inclusion, your gross income definition. Just to revise a bit of that. Okay, so if something meets the definition of gross income, it will be included. Remember that?
Yes.
Okay, so those 2 are easy. And then obviously the expenditure, there's obviously notes here, so some you'll have to deduct or change or alter, and others you won't. So let's just write them all in. Okay, I'm just going to write the amounts here, and then we'll just put them in if we need them. Okay, depreciation. Ooh, depreciation, asterisk, we call that wear and tear when we look at tax. Okay, wear and tear allowance, depreciation, you are not going to show the accounting depreciation in because accountants use their own method of depreciation. It might be similar to SARS, but SARS you need to use wear and tear. So there you need to apply section 11E. Okay, so that I know will be different. We'll leave the 50. Okay, that's the 50, but that's the depreciation. That's not SARS's calculation. SARS might be the same or it might be different. We need to confirm. Okay, donation. Okay, the donation, we also need an amount. That whole limited to, I think it's 10%. We can go check that again. Okay, the donation also needs to be calculated. This is how much? 8,000. Okay, electricity, that's a normal section 11A deduction. unless otherwise mentioned. Okay, section 11A. That one I'm going to put in. There's no note for that. Well, it doesn't look like it, but we'll see. Okay, the fine. Obviously, the fine you already know. Section, I think it's 11O. I hope it's 11O. Let me just double check. Fine. Oh, it's 23O. It's 23O. The fines. Yes, 23O. Okay. Not 11, 23. Okay, section 23O. O. Not 0. O. Okay, not allowable. Okay, so you will always show null here. Right, and they should give you a mark for that actually. Does that make sense?
Yes.
Okay, grooming products. $125. Insurance. Penalties and interest, same thing as before. But, okay, there's a note here. So actually, maybe some of it you might. The interest maybe. The interest might be for different interests. It might not be the interest that I'm thinking about. Interest on the tax. But the penalties is definitely not allowable. Do you agree?
Yes.
Okay, yeah, so just be careful with this. I'm going to leave it in for now, but we can change it when we read the notes. Okay. Salaries. That's also 11A. This is also 11A. Okay. All right. Okay, now we've looked at all of that. Now we can continue. All right. Depreciation relates to the delivery vehicle purchased new for $250,000 on the 3rd of May. I need the 11E deductions. Did they give that to you? No, they don't. You need the years. Okay, let's look at the formula sheet here. We need some sort of years here. Was it given here? Yes, it was. No, this is prepaid expenses. Nope. Okay, so what are we going to use for this? What would you use if this happened in the exam?
Was it not new?
Yes. Oh, SBC. Okay. Ah, SBC. Okay, so I thought there might have been a mistake here, but it's not a mistake. Because it's SBC, you can apply. Okay, so it's not 11E. SBC. Special. It is, what section was it again? 12E, I think it was. Where are we? Here. All right. Production? No. Movable? Yes. Manufacturing? No. Non-manufacturing? Yes. Do you see that?
Yes.
Okay. Ooh, what was the amount? 250,000. Happy with that one?
Yes.
Okay, the donation. Y made an 8,000 donation to Paws R Us, a public benefit, and received a Section 18A receipt. Okay, this you just need to check in terms of the whole 10%. I think it's 10%, but we'll double check that. So the donation of 8, okay, it's allowable because of the certificates. Okay, you have to have a certificate, which it does, but now you just need to, the donation we should actually put at the bottom because we need a little subtotal. Because it'll be limited to, I think it's 10%, we'll double check. I think it's 10% of taxable income. Here, taxable income, page 102. There, donations to PBOs. Yeah, 10% of taxable income. Do you see that?
Yes.
Okay, so that one we can't answer yet, but we've got the 8,000. We still need to check it. Okay, we need to finish off the rest. Okay, the fine while speeding. Yeah, doesn't matter what it's for. You can't deduct it. Grooming products, including the 125,000, grooming products with a cost of 260 was taken for no consideration by an employee during the year of assessment. What is that? That's drawings. Do you
What
agree?
did they mean? Why did they say for no consideration?
That means they didn't pay for it.
So like somebody stole?
Well, it's an employee, so you probably gave the employee the goods without having to pay for it. Oh, I see where you're going with this. Are you saying this is theft?
Well, it's not clear, so I don't know.
Well, I think what's not clear is the employee an owner? Because if it's an owner, then this would be drawings. Do you agree?
Yes.
All right. And if it's theft, then it's something completely different. If it's theft by the employee, then it's not deductible. Do you agree? I think it might be that actually. Can we go with that?
Yes.
Okay, so non-deductible. So
Would you not just the 2006? Oh, okay. Yeah.
Yeah, I'm going to take out the 2.6. So the difference is deductible. Agree?
Yes. If it was drawings, what would you do?
Okay, then we need to check it. You also have to take it out actually. But you're taking it out for a different reason. Okay, so let me find, oh, actually, it looks like that's the only one. All right, here. Partners are taxed on their profit irrespective of their drawings. Let me just try drawing. Is it only one? Okay, maybe they haven't even covered this. This might be beyond the scope, but let's just check the contents page. Employed individuals might be under there. Admin, assess losses, capital gains, trading deductions. Yeah, probably under the first one. And maybe the trading deductions, but as a separate note. So page 91 in 1. Okay, let's just see if there's anything here. Services, non-cash fringe benefits, none of this stuff. Unless there's a note about drawings. No. Allowances, no. Deductions, no. Okay. All right, let's look at the next one, page 91. Too far. Okay, let's see if there's anything here. Bad debts, nope. Private domestic, yeah, here we go. Private domestic expenditure, there's it there. Deduction specifically not allowed in determining taxable income. Do you see that?
Yes.
Okay, that's part of our notes actually. That's part of week 5. No. Yes. Okay. There's it there. I actually haven't made a note about it. It's probably on a separate one. No, this is specific deductions. Where's the non-allowable ones? Let me see if I can find it now. Here, there we go. Prohibited deductions, domestic or private expenditure, yeah, drawings. Drawings forms part of that. So, but then the rule would have been a different rule. It would have been, what rule is it? It would have been section 23A. Do you see that?
Yes.
Okay, then your reasoning would have been section 23A, and you would have put a note there. Not theft. Okay, theft. We would take out the theft because it's the theft by the employee. So let me show you that actually. Here, where's it? Where's A now? I think I might have gone past it. No, that was right. What page is that on? Page 104. What page is this? 92. Okay, that's much further on, no wonder. Okay. 104. 104, 102, 103, 104. Here. Okay, there we go. Okay, domestic or private expenditure. Cost of maintaining family members or domestic or private. Do you see that?
Yes.
Okay, here it is submitted that an employee carries on a trade deduction. This is for purposes of a trade. This is something else. This is looking at giving them a compensation for business expenses. Let's find the theft here as well. The theft should also be here. Okay, theft should come up actually. Okay, here's theft. There. Insured losses. Okay. For if the taxpayer suffers a loss as a result of theft, then it's deductible in terms of section 11A. Do you see that? But not if it relates to employees.
Yes.
Okay, if it's theft by employees, it's not allowed.
Okay.
Okay, I don't know where we can see that in the textbook, but it's definitely...
I think maybe insured losses. Could that be it?
Yeah, but this is it here. But I don't see the note about the employees. If employees steal from the business, you're not allowed to deduct that because you don't expect employees to steal.
Yes.
Maybe here, such loss will only be deductible to the extent that it's not recoverable under. Okay, well, yeah, that's something different if it's not covered. Okay, do we have more search queries? There's only one. Yeah, it's only one. Yeah, but it's not allowed under employees. If employees steal, it's not deductible. If consumers steal, it's deductible. Does that make sense?
Yes.
Okay. Where am I now? Where's my Excel? What happened to my Excel? Here's it. Okay. All right, let's have a look at the next one. Okay, the prepaid insurance. A prepaid insurance amount of 192,000 was paid on the 2nd of May. Okay, so here you've got to look at the dates. All right, so what year end do we have here again? What is the year end? 28th of Feb. 28th Feb 2018. What date was this? May 2017. Ooh, so May to Feb is how many months? May, June, July, August, September, October, November, December, January, February. 10 months. Do you agree?
Yes.
Okay, this is a prepaid insurance amount of 192,000 paid on the 2nd of May for a 12-month period from May to April. Okay, so we need to put a note about this. Okay, so this is for insurance. Okay, so prepaid portion is 192 times 2 over 12. Okay, because this is a period of 12 months, yes. All right, so if I multiply the 192 by 2 over 12, I'm going to get 32,000. So we need to show a separate line here. Insurance paid during the year, for the year, section 11A. All right, so the 192, take out the 32. Okay, so 160 is deductible. Do you agree with that?
Yes, but then the 32,000 will also be deductible.
Well, we need to apply the rules. Okay, so when we apply the rules, this is for a prepaid expense. Let's go revise. Okay, prepaid expenditure. The rules are as follows. Where the aggregate amount of all amounts which would be subject to the section does not exceed 100,000. It does not exceed 100,000. Do you agree?
Yes.
Okay, where the goods or services are supplied within 6 months of the year, that does apply. Do you agree?
Yes.
Okay, so the provisions do not apply where the goods are supplied within 6 months. So that means it is within 6 months. So I can claim the full amount. So let me just show that as an example. Here's an example. Okay, 180,000 is deductible for services rendered and it was during that period. Okay, on the 1st of January, he paid his business insurance premium. Okay, the 240, all right. That's obviously during the 6 months, it's fully deductible. Okay, and the premiums were less than 6 months. No, it's not less than 6 months. It's more than 6 months. Let me just go to my notes. It's easier just to read on the notes. Oh, did I close it? No. This is capital allowances. Let's just go look at it. It's easier just to look at this. Okay. Prepaid.
Last, you're on the correct slide. It's just the last point.
Ah,
Previous one. There.
yes. Okay, prepaid. Is it less than 6 months? It ticks that box. It's actually both. So both will apply. So you can deduct the full amount. Do you agree?
Yes.
Okay, remember this is an either or. So when it's less than 6 months, even though this is more than 100, you can still claim it. Does that make sense?
Yes.
Okay, because of the 6 months. If it's less than
So it's
100,000 or less than 6 months, you can claim the full amount. Do you agree?
Yes.
Okay.
So if it was, say, for instance, 8 months, but like 95,000, you can still claim the full amount.
Correct, because the 95,000 is still less than the 100, yes. Make sense?
Yes.
Okay, it doesn't have to meet both requirements, it just needs to meet one requirement. Do you agree?
Yes.
Okay. All right, the penalties, this amounts to rate to late payments and unemployment insurance contributions. Okay, yeah, that's definitely not allowed. Happy with that?
Yes.
Salaries includes 86 relating to contributions paid to pension funds. Okay, this we need to take out. Okay, so the salaries we need to remove. The pension contributions. All right, so how much was the pension contributions? 86.
Yes.
So it's 300,000. Okay, then we need to look at the pension separately. Yeah, they were for employees, hey? Yes, they were. All right, so when you go to the textbook, you'll see you are allowed to deduct this pension. But again, just look at the legislation. There, deductions and pensions, page 27. I think this is, no, that's page 6. There. Okay, who contributed this? Included in salaries is 86,000 related to contributions paid to a pension fund for the benefit of employees. So did we pay that? It sounds like we did.
Yes.
Okay, so contributions to retirement funds by employers, we need to apply this. Okay, no value. Okay, no, that's not it. Okay, if it's paid on behalf of the employee, where the benefits consist solely of defined contribution components, the benefit value is simply the amount contributed by the owner. Okay, that's fine. So it's the full amount. Agree?
Oh, because on our notes it says 10%.
Let's see if there's a limitation here. The 10%, I think that is when the owner, I think that's when the employee contributes. Let's just check this. Okay, here we go. Pension or provident fund. Okay, these are provident fund contributions. What was this for? Okay, this was a pension fund. Okay, fine. So if it's a pension fund, these are contributions. It's actually this one, section 11F. It wasn't the other one that we looked at. Sorry, my internet's a bit unstable. I see a message popping up. Can you still hear me? Are you still there? Can you hear me? Hello, hello?
Hi.
Okay. Sorry, I lost the connection there. A message popped up. Okay, contributions to retirement funds. A member's contribution to, see, these are a member's contribution. See, this is the taxpayer's contribution to the fund. This is for an individual, not for a company. So the company, we need to look for the company's contribution. There's a difference. Okay, in the notes, I think I did say 10%, but we need to confirm it. I just want to see where that is in the textbook. Where is it? Yeah, here. Employer contributions, 10%. Okay, let's go find it. Or that might have been a practice note, actually. Ah, I think I remember now. Okay, I think it's a practice note. Let's go back to that. It's a practice note. It's a practice note here. There, contributions by an employer. That's the one, page 102. Yes, okay, so this is what we read. But remember, the textbook doesn't show what the practice note states. This is part of the practice note. This we'll have to Google. Okay, I remember now. Okay, this is not theory in the textbook. This is theory in the practice notes. Actually, while we're Googling it, you have a UNISA textbook. Okay, what section is this? This is section 4, I think. Deductions.
I think 5. Yeah, 5.
5. Okay, there's legal, there's restraint of trade, bad debts, contribution. No, it's actually 4. Textbook, chapter 4. Oh, is this chapter 5 though? Unit 5. Chapter 4 or?
It's unit 5.
Unit 5, here. Okay, they don't mention it either here. They want you to use the textbook. 4.3.10. Okay, there's 4.3.10. So, okay, the UNISA study book doesn't even give it to you either. So you do have to Google it. Yeah, this is a practice note thing, eh? Let me show you an example here in the textbook. Do they give you any questions here that are complete? Okay, here's an integrated question. Let's see if we've got a note there. There, contributions. Do you see the 150?
Yes.
Okay, have a look at their solution. There's the contribution. Yeah, they're limited to 10%. There we go. See, SARS practice. There we go. See, there's the confirmation. Right, so that's where you're going to see it. So you can Google it or you can just look at it there. It's in the example. Okay, do you see that there?
Yes.
Okay, so it is limited to 10%. That's right, but it's a SARS practice note. That's the important bits. Okay, so we need to write that down. Where's my Excel again now? Here. Okay, so did they give you the salary amounts? Yes, they did. 300,000. Agree?
Yes.
So it is going to be limited. Make sense?
Yes.
Okay. And that's it. Now we can wrap up this question. We just need to tally up. Oh, we just need to look at that 10%. Okay, so add and subtract all of this stuff. Okay, times it by 10%. Okay, no limitation placed on the donation. Do you see that?
Yes.
Okay, now we can wrap up and we just need to delete the extra lines. There's no CGT here. Okay, then we need to apply the tax tables. Okay, I'm just going to use this budget guide because that's the tax table you'll be applying for an SBC. There we go. Okay, do you still remember how to use these tables?
Yes.
Okay, which one are we in? We're in the second one. Do you agree?
Yes.
Okay, so we need to find the difference. That minus 83100 gives us that. Times that by 7%. Okay, so... Oh, that's the answer actually. Okay, because no tax is paid on the first 83. Do you see that?
Yes.
Okay, and then you had some short questions just taking the micro into consideration. So let's quickly look at that. Okay, this question says, state if Yappy would qualify. Okay, this is a theory question. Do you see that?
Yes.
Okay, all you have to do is go to my notes and take that checklist. I think this was study unit 4 or chapter 4. Let me go open up the other notes. Okay, I want to close some of these other ones because I might have problems with opening up too many files and the internet connection dropping here. Okay. I think it was 4 if I'm not mistaken. There's a table. Yes, that's what I want. Okay, I'm going to literally copy paste this. And this is what you need for this question. Okay, so this is question, what is this, 2B. Oops, that's going to really stretch it across. Ooh, undo. Okay, is it okay if I leave it like that?
Yes.
Okay, because it's going to change all of the top bit as well. Okay, I'm just going to quickly shrink this a little bit. Okay, we'll wrap text it. Okay, you still can't see some of it. Okay, I'm gonna shrink it as in size wise. Okay, all right. So let's go to the question. All right. Are shareholders natural people? Yes or no?
Yes.
We can delete the SBC one. Okay, so natural, yes. Do they hold any shares? I didn't see anything about them holding any shares anywhere, so you could probably assume yes. Do you agree? None. Gross turnover less than $1 million. Was gross turnover less than $1 million? Yep, looks like it. That's less than $1 million.
Yes. Yes.
Was there any investment income? I didn't see any. Was it a private company? Yes, it was. P2Y Ltd. Was the year end the same as the individual? Yes, it was. So will they meet the definition of a micro?
Yes.
All right, and then the last bit is just to do the calculation for it. So if you were looking at micro, all right, so there's 6 marks. See, 6 marks for the 6 points. Okay, because that's theory. All right, but I don't think you'll get a question like that if they're telling you that it's all application. So you might not have to do that, but we will do it because we need
I
to
might
cover.
get it
Sorry?
like that because said there's no theory for units 1 and 2.
Oh, okay. So then you will
So
probably have to do
I
it.
may just get a
Yeah, so that's something that you might have to do actually. Calculate the income tax liability for the year of assessment, assuming it's a micro, not a small business. Okay, so taxable turnover calculation. Okay, again with this one, you need the notes. Let me go find it here. Where is it? Oh, it might have been on the previous page because this is recap. Yeah. Okay. Actually, let's just use the textbook. It's easier. Well, for this one, taxable turnover. Okay, taxable turnover. There we go. Okay, we need a. There we go. That's better. 189. Turnover tax. Okay, there we go. We just need to find the requirements. I think this is it actually. Yeah. Okay, no, this is just talking about the amount. Only 10. Okay, here. No, that's taxable turnover. No, that's not quite right. I'm looking for something better than that. Let's see if we can. Oh, here, qualifying turnover. There we go. That's it. Total receipts, carrying business activities, excluding capital of nature, excluding any amounts exempt in terms of tax according to that section. Remember that.
yes.
Okay, here's another example. taxable turnover, revenue receipts carrying a business in the Republic, including receipts as per 8.4. So you can include some of it. For micro businesses, 50% of all receipts of capital nature from the disposal of. So only if it's the disposal of. Immovable property, but you don't have any of that. Other assets mainly for purposes of the business. Okay, 100% of investment income as defined. Right, do you see that? Okay, you exclude for natural persons investment income, any amounts excluded, any amounts received or accrued to in terms of registration of micro business. This is for prior to. And then this is received in respect of a person that's registered. Okay, so that's something separate as well. Right, so it's quite a straightforward definition. You could probably use this one or that one. Where is it? This one. You could probably use this one or that one. Okay, so in this question, you didn't have any other receipts. Do you agree? You only had that. So you're going to put the full amount in. Do you agree?
Yes.
Okay, so it's literally just a copy paste here. All right, and then go back to your budgets. Where's the micro? Here's the micro. All right, so it's on 907, so it'll be this one at the bottom. Do you agree?
Yes.
Okay, so above 750,000 will be this minus 750,000. Gives me that figure. Okay, then you need to multiply that figure by 3%. Okay, and then the final tax liability will be 6650 plus 6837.60. Okay, and that's it. All right, so yeah, that's how I would do it with all the other examples. Try to do 2019. 2019 is actually quite similar in terms of content that is probably more recent. I think similar to 2020. I do know, though, that there is one obviously clear difference. It was that provision stuff, the 40% thing. That I definitely know is new. Okay, that we've never done before until this year. Okay, when it came up in the legislation, that's new. Okay, actually not this one. Okay, that one's still fine. It's just the current one. Okay, the current one is the one that you need to look out for. Other than that, everything else will be the same as before. Okay, is that all right?
Yes.
Okay, great. So I think maybe what you could do for next week. Okay, so next week, obviously I'll send you this past paper, but I want to just see the 2018, the second one. I'm going to give you the May-June one. Try do part of the May-June one to see if you can do some of it. Okay, let me just bring it across. Okay, so this is the May-June 2018 one. This is another one that I haven't done yet. But just to practice and prepare, I'm going to send you this one. Okay, it's actually very similar. You could probably do the two questions now. You could do one and you could do two based on what we covered today. Is that okay?
Yes.
All right, so then at least next week, then this will go a bit quicker. Okay, we can check those two that you've done. And then obviously I will do these two questions. Where's my other past paper? This one. Ooh, sure, I've got so many PDFs open. Let me close some of the stuff. Where's the other PDF? This one. Okay, in this past paper, next week, I can do these two with you, and then I can give you the other two in the May-June to do for the following week. How does that sound?
Yes.
Okay,
That's perfect.
at least then you're also trying it. So you've seen one attempt. Okay, you've seen me do 1 and 2. I'll go see if I can find some old videos. I didn't send you any videos. I just sent you the answers. I might have recordings for some of them. If I do, then I'll send you some content. Maybe I'll send you the 2019 because that's more recent. At least then it's similar. It's more similar to some of the much older ones. So I'll see if I can find those clips, and then at least you've got some extra content. But for next week, try do 1 and 2 from the May-June. Next week we can just check it. You can tell me how it went, and then this one I'll do with you, and then you can do that for the following week and see how that goes. At least then you've attempted and tried, and in the last week we can just look at maybe one more or a different one, or maybe they'll send you the 2020 maybe eventually, because there's still lots of time actually, so maybe they're just a bit slow. They might populate the platform with more recent past papers closer to the time.
Okay.
Okay. All right. Yeah, it's quite a long session, but yeah, the first one always takes a bit getting used to and getting back into it. So I hope the revision did help. Going back and looking at the content does help as well to make sure you can see why we're doing those workings.
Yes.
Okay, awesome. Next week, we can probably start at the same time. I do have some flexibility with time. Wednesdays afternoons are quite open, so I don't mind if you want to push it earlier or later. It's up to you, but this time seems okay for me. And if it's okay with you, we can maybe host at the same time next week.
Yes.
Okay,
That would be
awesome.
perfect.
All right, great. Okay, Cheryl, see you next week. Have a good week.
Okay. Thank you. You
Okay,
too.
bye.